Hi, it's Doug Atkinson from Black Sun Mortgage, and here I am to talk to you about financing 1283 Howe Street. But before we get into that, let's talk about the rates. What happened the past week is the Bank of Canada has increased its rate by 1%, more than the 3/4% they thought they'd originally do. And because of that, it affects variable products, home equity lines of credits, but not fixed mortgages as much. Fixed mortgages are based on the bond market. But with a variable rate mortgage or an adjustable rate mortgage, they're two separate things. These are affected by the increase of the rate. Usually your lender will give you a 30-day notice after your last payment that the rate is going to go up. That gives you the opportunity to lock into a closed fixed mortgage rate of the day at any time before that change. But a lot of people over a 10-year period do quite well in a variable rate mortgage or an adjustable rate mortgage. Now, those are two different things, and I can explain that to you. Adjustable rate mortgage means the prime interest rate goes up or down, and your mortgage payment also increases or decreases. That's an adjustable rate, so that your payment will change with the rate increase or decrease. A variable rate mortgage means that your mortgage payments don't change. They stay the same. The interest rates change, but less. If the interest rate goes up higher, less money goes in towards the principal of your mortgage. So you have the same mortgage payment the whole time. But however, there is a point where it reaches a threshold, and they will have to increase your payment, because at that point, hardly any money is going down on the principal. So be careful what you're getting, whether it's an adjustable rate mortgage, which you want, or a variable rate mortgage, which is kind of tricky. So keep that in mind. But now let's go on and discuss the financing for 1283 Howe Street. I hope you had a chance to see the home tour. If not, the link's up here. And let's get into it. Okay, the purchase price is $1,299,000. And now any home over $1 million, most homes, you're going to have to put 20% or more down on them. So you're looking at a minimum of $259,800, which would give you a mortgage of $1,039,200. With a 25-year amortization rate at the current rate today, we're looking at July 28th. We're looking at approximately 4.39 for a 5-year term. Your monthly payment is going to be $4,711.52. Now, the minimum income required for that loan would be $239,250. So, and this is a 3-bedroom. So if you're a person that needs roommates and stuff, that's perfect, because you can afford to pay that. If you're putting 35% down on this mortgage, that it would be $454,650. The mortgage is $844,350. 25-year amortization at 4.39%. Your payment is $4640.61 per month, and your income required for that is $199,253. So those are the values that you're looking at when you get into these mortgages. Keep in mind also, you have property transfer tax that you have to pay here in British Columbia. It's 1% of the fair market value up to and including $200,000, so that's $2,000, and then 2% of the fair market value up to and including $2 million, so that's an additional $21,998. So total of property transfer tax on this home is going to be $23,998. Now keep in mind, this cannot be added to your mortgage. So your down payment for, say, at 20%, which is $259,800, you would add an additional $23,998 to that. That has to come out of your pocket. So that amount cannot be added to your mortgage, nor can GST. GST is usually pulled out. But in this case, it's a used property, and you just pay the property transfer tax. So those are the costs getting into this particular home. So hopefully you learned a little bit more. And if you want to ask some more questions, you can always email me at the email address here, or you can call me at the number down below in the description. And thanks a lot for coming by, and we'll see you on the next finance tour.